How do emergency funds create financial resilience? Imagine facing an unexpected car repair that costs $500 or a sudden medical bill of $1,000. Would you be able to handle it without stress? That's where emergency funds come into play. They act as a financial safety net, helping you stay steady during tough times. An emergency fund is money set aside specifically for surprises like medical emergencies, urgent home repairs, or losing a job. Having this money means you don't have to borrow money at high interest rates or sell investments prematurely. For Black communities, where access to affordable credit can be limited, emergency funds are especially important. They help avoid falling into debt traps like payday loans or credit cards with high interest. Building an emergency fund reduces financial stress because knowing you have money for emergencies makes you feel more secure. It also prevents you from relying on expensive credit options that can trap you in debt. When you have an emergency fund, you gain the freedom to make better choices. You can focus on solutions instead of panic. For example, if your car breaks down and you need repairs, you can pay for it without borrowing money or missing bill payments. Emergency funds also protect your long-term goals. If you need money during a crisis, you won't have to dip into your retirement savings or investments, which can slow down your wealth-building progress. Starting small helps. Aim to save at least $500 initially. Then work towards saving enough to cover 3 to 6 months of essential expenses. This means if your monthly bills are around $1,000, your goal should be between $3,000 and $6,000. To build this fund, open a separate savings account that is easy to access but not mixed with your everyday spending money. Contribute regularly, even if it's just $10 or $20 a week. Prioritize this savings before spending on non-essentials. Insurance policies help cover some costs, but they don't always pay immediately or fully. Emergency funds fill those gaps by providing quick cash for deductibles, co-pays, or uninsured expenses. Educating Black communities about both emergency savings and insurance options strengthens financial resilience. Combining liquid savings with insurance tools helps protect families from financial shocks. In the end, emergency funds are a simple but powerful tool. They give you a safety cushion that helps you handle surprises without falling behind on your financial goals. They reduce stress, prevent debt, and keep your wealth-building plans on track. For communities that have faced financial barriers, having an emergency fund can be a game changer for stability and growth.